Hello and welcome to this week's educational presentation, where today I want to talk to you about my 50-year trading strategy. Now, this doesn't mean that you have to trade this for 50 years. It basically means in the title, I was first introduced to this method nearly 5 decades ago on the floor of the stock exchange. And it's a method I continue to use till today. And I'm going to show you a lot of examples on how well this method works with a lot of recent examples in today's markets, crossing different time frames, as well as looking at different markets as well. And for example, let me share with you how most traders trade and why most traders are unsuccessful. If we look at this first chart here, here's a fairly recent chart of GILD, Gilead Sciences, okay? Now, a trader basically looking at this would say, well, we're in an uptrend, but then all of a sudden, the market changes and it looks like now we're in a downtrend. Well, here's the beauty of this strategy that we're going to be talking about today. The very first rule would have identified that the overall trend was actually up. And then the second rule, which I'll also be teaching you today, would have identified that the short-term trend was up. So those make up the first two rules of this method that you'll learn today. Now, the remaining two rules were also met, and they generated a buy signal right here. So this was just a couple of months ago, and as you can see, the stock had a nice gain. You could have potentially captured upwards of 25 points in the following days. So that's the subject of today's educational presentation, my 50-year trading strategy. So welcome once again. My name is Stephen Primo, president and founder of Specialist Trading. I've been trading now for nearly 50 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. That's where we get the name Specialist Trading. Specialist is someone not any more special than anyone else. It just means that you specialized in making markets in roughly about 50 or 60 stocks. So I did that while I was on the floor of the exchange. I made markets during the crash of '87 and the bull market that followed. So in my nearly 5 decades of trading, I've experienced just about every market environment you can think of: straight up markets, straight down markets, sideways markets. I've traded just about every technique or strategy you can think of. So most likely, if someone tells you they have a brand new system or a brand new strategy, it's most likely been around before. It just has been rebranded or just edited or altered slightly. But today I'm going to share with you a method that really has pretty much stayed the same in my entire 48 years of trading. And I'm actually going to teach you the first two rules to this method. So you'll be able to actually apply these rules to any strategy you're currently trading. And I really feel they will increase your odds for consistency. And you'll see how simple they are, but how well they can actually get you back on track. So that's what we're going to be talking about today. But before we begin, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this 50-year trading method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on X, formerly known as Twitter, or you can subscribe to us on YouTube. Those are different ways to get content from us. Every day I post upwards of 5 to 7 different snapshots of trades or signals that our methods have generated. And also this is being broadcast live on YouTube. So if you'd like to see more of that content, if you're following us on YouTube, please hit the subscribe button. Okay, so let's begin today's educational presentation. We're going to be talking about strategy number 4. This is the method that I've been trading for nearly 5 decades, my 50-year trading strategy. And just to give you some of the highlights for this particular method, it's actually very simple. It's only got 4 rules. It's a pattern recognition strategy. So we're not looking at any moving average crossover. We're not looking at overbought, oversold lines or anything. We're simply looking at a pattern that repeats itself over and over in virtually any market and in any time frame. Now, it was originally designed for traders looking to catch quick momentum. And when I traded it on the floor, I was literally getting in and out of trades in a matter of minutes. But we've developed ways to stay in the trade much longer, days, weeks, or even months if you'd like. It only uses one indicator. That's how simple this is. And you're going to learn what that indicator is in just a few moments. Now, the advantages to trading strategy number 4 are: 1, it's extremely consistent. Now, I know a lot of you think that consistent means that, well, it has a lot of winning trades. That's not really the true definition of consistent. And you'll see this in detail later on. I'll go into detail and show you a few examples. But consistency really means an awareness of losses, that you will have losses from time to time. But an extremely consistent method is one that's able to recoup those losses, often on the very next setup. So you'll see some examples of that in the coming presentation. Now, it makes you a part of the process. We feel that most traders lose because they're basically taking themselves out of the game. You're allowing someone or something else to decide for you. But with this, there are different variables and ways in which to trade it, so you are a part of the process. And lastly, it was designed to be as simple as possible. As I said, there's only 4 rules to this method. You're basically looking to identify a pattern. I'm going to share with you the first 2 rules of strategy number 4. Okay, so let's go over rules number 1 and 2, and you won't believe how simple they are, but in upcoming examples of the signals, you'll see how powerful they are as well. All right, rule number 1, buy and or sell signals can only be entered above if it's a buy signal, or below if it's a sell signal, the 50-period simple moving average. Okay, so this means you have to have a 50-period moving average plotted on your chart if you want to be able to identify this on your own. For example, we see here in this generic chart that here's the 50-period moving average, and if price is above the way it is here, the market, not me, not some guy on TV or in a chat room, but the market itself, the very thing you're trading, is telling you the overall trend is up. And therefore, what's the significance of this? Well, therefore, you will only generate buy signals. This strategy will only be generating buy signals if price is above the 50-period moving average, because you're in sync with the overall trend. Now, conversely, if we see here that price is below the 50-period moving average, as we see the 50 right there, well, then strategy number 4 will only be looking to identify sell signals. It will never generate a buy signal below the 50 and never generate a sell signal, meaning to go short or to bet on the market to go lower if it's above the 50. Why? Because we want to always be in sync with the overall trend. This is what adds to the consistency when you are in sync with the overall trend instead of fighting it. Now, if you don't see how powerful this simple tool is, go back and look at your last 10 or 20 trades. I always tell students this when I'm teaching this method, because I say, go back and look, and I can almost guarantee the reason why you had losing trades was because you were selling short or betting for the market to go down when you were above the 50-period moving average, and betting for the market to go up, you were buying or going long when you were below the 50-period moving average, okay? That's how powerful this is, and anyone can apply this process right now. All right, so that's how we determine the overall trend, rule number 1. Rule number 2, we want to determine the short-term trend. They want to be in sync. Now, we don't do this by looking at a different time frame or different patterns. We use this simple rule. Buy and sell signal bars must close in the top or bottom 25% of their range. So what does that mean? All right, say price is above the 50-period moving average. A buy signal can only be generated and identified if the signal bar, the bar where everything comes together, closes in the top 25% of its range. It has to close in that top portion. Conversely, a sell signal below the 50-period moving average will only be identified if that signal bar, the bar where everything comes together and all the requirements are met, it must close in the bottom 25% of its range. So let me share with you that generic example again. All right, we're above the 50, so the overall trend is up. And we see these 2 bars here closing in the top range of the length of the range of the bar. You see this? And you see how price went up after that. Now, immediately price fell down, and this is where students say, but Steve, I could have shorted and gone short. Yeah, but you would have done much better if you simply gone with the overall trend and the short-term trend. So that's how simple it is when you have the overall and the short-term in sync with each other. Here's another example here. Price is now below, so the overall trend is down. Now we look for a bar that closes in the bottom quarter of its range right here. So now the short term and the overall trend are in sync, and look what happened to the market. This is how you gain that edge. This is how you have a certain level of consistency if you're applying these 2 rules. Now, these 2 rules are extremely powerful. You can apply them to any market, any time frame, and you can apply them to any strategy you're currently using. So it doesn't have to be strategy number 4, but in the upcoming examples, I think you'll see how powerful this is when we apply all the rules together, making up strategy number 4. Now, I want to share with you some recent strategy 4 examples, and you'll see those 2 rules in place. But the examples that we're going to be sharing with you are coming from the PTS Primo charting platform. I developed and designed this with pro trader strategies with one goal in mind, to make trading simple by auto-identifying the strategy number 4 signals. So in other words, when you're learning how to identify this, sure, you'll have the 50-period moving average plotted the way you see here on the screen, and you'll look for the top and bottom 25% range bars. But the platform automatically takes all of this into consideration, and there's nothing you really have to do. You don't even have to plot it after a while because it automatically identifies it for you. And I'll show you exactly what that process is. All right, so let's look at ABBV. All right, someone looking at this would say, well, gosh, not much of an idea what this is doing. It's kind of basically going sideways. But here's how you check your work. Let's say you were learning how to identify a strategy 4 signal and you think you've seen one. Well, this is the beauty of the platform. You'll click on strategy number 4 in the drop-down menu, click on signal arrow, and this is how you identify to see if you're probably identifying a signal correctly. So as we see here, yes, you did. You actually identified this signal on your own because you can use the platform as a way to check on your work. And look what happened. The stock went up 25 points you could have potentially captured. Now in the course, we teach you how to exit. If you'd like to take a quick exit, if you'd like to stay in longer, if you'd like to trail the trade, it's entirely up to you. This is the beauty of what we teach you so that you can become a part of the process. Remember, that's how you become a consistent trader, not by listening to some guy on TV or someone in a chat room or some economic report or even some guy in a webinar. It's by someone teaching you all the different variables so that you can decide for yourself. That's how you become a part of the process and a consistent trader. Here's another example, APD. All right, looks like a sideways market, right? Most traders would say, well, I'm not going to do anything here. This is basically just going sideways. There's no real identification that we're going to break out or break down. I'll just wait or avoid this altogether. Well, that's actually not true, because if you had clicked on strategy 4, in the drop-down menu, click on signal arrow, it would automatically identify a sell signal. So this is telling you that it's automatically below the 50-period moving average. And as you can see, we close in the bottom 25% of its range. So those first 2 rules have been met. And look what happened in the following week or so. The stock fell 50 points. So what happened to that range market that was doing nothing? Prior to it breaking below that range, strategy 4 had already identified a sell signal, telling you that there was going to be some quick momentum to the downside. Here's that first example we started out with in GILD. Okay, it originally looked like it was going up, and then it's looking like it's going down. So you think to yourself, well, the trend is down, right? Well, once again, strategy 4 says nope. It automatically determines, without you having to plot the 50-period moving average, that you're above the 50, and it automatically identified the top 25% bar, and the remaining 2 rules of the strategy were met. So there was a valid buy signal. And it jumped up and gapped up the very next day, and in the following days was up 25 points. You could have potentially captured 25 points. This just happened a couple of months ago. Here's an example in the 4-hour British pound, because we know not everyone trades stocks. Some people like to trade intraday bars of Forex markets. Okay, so here it looks as if you're in a downtrend, right? The market is going lower. But the platform automatically identified that you were above the 50, and you're closing in the top 25% of these last 2 bars here. So there was actually buy signals being generated, telling you to go long if you decided to. And look what happened, 175 pips in the next 2 days. That was close to $1,800 per unit that you could have captured potentially. Once again, all of the sell rules, all the stop placements, all of the advanced entries are taught in the course. So I'm not leaving that up to you just to decide on your own. And people will say, well, how do I know where to get out? That's something we teach you once you decide to become a student. Here's an example in Apple. Okay, let's say someone's using Technical Analysis 101. They say, well, Steve, this is in an uptrend, so I'm not going to, sell this, because you say to be in sync with the overall uptrend, right? Well, this is why most traders fail, because they're using faulty ways to determine the trend. Remember, the way we determine the trend is by applying the 50-period moving average. And it's automatically auto-identified without you having to plot the 50-period moving average, because look what happened. The stock fell out of bed. Now, had you waited for it to break that uptrend, you would have had to sell at a loss right here, right? But with strategy 4, a full week in advance, it was already generating a sell signal. So you had a full week prior to that drop to get in to go short, and you could have potentially captured 50 points. Whereas if you had used technical analysis 101, you would have probably gotten in here. And sure, if you were lucky enough to hold on for the next few days, you had a nice profit. But most people would not like to short when it's down this much. Now, how about looking back in hindsight of AMT, all right, American Tower Corporation? This is where most traders do. They look back and they say, well, gosh, this thing has been going steadily higher, but how did I know? Well, there's no way to know it's going to go higher. Well, remember, strategy 4 is not a predictive tool. It doesn't tell you how high or how low a stock or a market will go. It simply is in sync with the overall trend. And once it's in sync, well, then it will generate signals all along that trend. Had you taken this very first signal here, you could have potentially captured upwards of 40 points coming into the first week of this month, April. Here's a sell signal in AON, all right at the very top of that nice upward move. Someone would say, well, gosh, it looks like it's going higher. Well, no. The strategy 4 determined through the pattern that it was going lower, and the stock fell 55 points in less than 2 weeks. Here's an example in Costco. All right, a buy signal was generated right here off this big up bar, closing the top 25%. The platform automatically auto-generated that it was above the 50-period moving average. And coming into the end of February, beginning of March, was up 110 points. This was before it started to head lower. Let's look at NXPI. All right, once again, another range market, right? This is where traders like to stay out because they say, look at this, it's just going basically sideways, and this is where you get whipsawed. Every time it looks like it's breaking out, you buy, and it goes lower, so you sell, and then it goes back up, so you buy, and then it goes back down lower, so you sell. You're getting whipsawed. So traders usually like to stay away from these range markets. But is this really a range market? Maybe it just looks like a range market because once we apply strategy 4, we see that it appeared to be a range market, but it was still below the 50-period moving average, and that pattern was identified right here and right here. So 2 sell signals were generated in that so-called range market before the stock fell 60 points. So you see how this automatically gets you in sync with the market rather than what you think you see or what someone is telling you what the market's going to do. Now, looking back in hindsight of the Swiss franc, how could we have taken advantage of this downward trend? As you can see here, the Swiss franc has been going down since February, all the way into the last week here in April. So how could we have taken advantage of this on daily bars? Well, just apply strategy 4. As you can see, it generated a sell signal here. We close in the bottom 25% and another one right here. Obviously, we are below the 50, or else it would not have generated sell signals. And the remaining 2 requirements were met. So you could have gotten in well in advance to go short or to sell the Swiss franc before it fell roughly around 900 pips. Here's a weekly chart of Tesla. Now, we know that Tesla has been going much, much lower, but before it went lower at the end of last year, it really had a nice rally. So we know that not everyone likes to go short a stock. What if we had bought this and purchased this in our long-term portfolio? All right, well, on a weekly time frame back in October, coming into the end of the year, a buy signal was generated. We're above the 50, even though you can't see it, we are above the 50. And obviously, we closed in the top portion of the range. So the remaining rules were met. And look what happened, 165 points higher in just 2 months. That's how simple it was, without having to look at what the company's doing, how to look at what the economy is doing, without having to listen to someone on TV. You simply are part of the process now, and you know how to identify these setups on your own. Or we look at Lulu, all right? Looks like the stock's basically going sideways, but this is a perfect example of what I was talking about in terms of the true definition of consistency. Remember, consistency does not mean that every trade is a winner. Consistency is an awareness that you will have losses from time to time, but a consistent method will often recoup those losses very quickly. For example, let's say you had gone short or bought the puts in Lulu off this sell signal. Well, you could have potentially captured upwards of 55 points to the downside in the following weeks or so. Very simple, okay? So let's say you covered with a nice profit. You say, wow, that was a really good trade. And then it bounced and starts to go higher, but now you have another sell signal. So let's say you decide to go short again, but this one didn't work out. In fact, it went down for just one day and then bounced up. So if you used one of our very basic stop loss placements, which we teach you in the course as well, we give you upwards of 6 or 7 different stop placements. If you used just a standard one, you most likely would have lost 10 points. All right. That's okay because you made 55 points or could have made upwards of 55 points. Let's say you made 30 points in the first one. Well, now you've given back 10. All right. So you're still above water. You're still doing okay. And lo and behold, here's another signal now generated. All right. So you decide to take this one because remember, consistency means an awareness that you will have losses like we had on this trade, but an ability to recoup those losses. And look what happened on this one. You could have potentially captured 95 points, okay? Let's just say, once again, you captured only 30 points on this. All right. So the first one, you captured 25, let's say, points. You lost 10 here, so now you're up 15. And then you captured 30, let's say, maybe 25. So you maybe made 30 or 40 points. You still had a really nice chance to make a profit, even though you had one loss. This is a perfect example of what we mean by consistency, a two-step forward, one-step back approach. Let's look at an example in Meta, okay? Looks like we're in a clear-cut uptrend, right? This is where traders often fail because they're, disguised in the market's disguised into having you believe we're going higher. But in all reality, if you click on strategy 4, then you click on the signal arrow right there. There we go. And now we see that we have a sell signal. So obviously we are below the 50 period because we'll only generate sell signals below the 50. And as you can see, we closed in the bottom 25%. So we're not in an uptrend at all. This is a clear-cut downtrend. And look what happened. The stock fell 120 points in the next week or two. So you could have potentially captured that, or if you were long, you could have saved yourself a 120-point loss. Now look what happened after that. It bounced up. And this is most likely where traders say, well, I've got to get back in. Look at that guy in that chat room said it's bottomed out. Time to get back in. It's probably going to recoup those losses and go all the way back and make up new highs. So I'll at least break even to where I was long before. But is it really going to do that? Because we're still below the 50-period moving average. Click on strategy 4. And it generated another sell signal. So this is why traders fail. They think that we're starting to go up when actually this is a selling opportunity. And then look what happens again. And now you gave it all back, and now you're really losing a lot more. Where if you were taking the strategy 4 signals, you could have potentially captured upward of 185 points coming into this past week. Here's an example, another Forex example in the Euro British pound. Looks like we're in a downtrend, right? We're heading lower, right? We're making lower lows, but are we really in a downtrend? Click on strategy 4, click on signal arrow, and no, we actually have 2 buy signals here. So once again, buy signals will only be generated if we are above the 50-period moving average. So obviously the overall trend is up. The trend is not down. And 370 pips you could have potentially made in a little over a week. That's close to $4,000 per unit you could have potentially captured. Okay, so let's recap what we shared with you today talking about strategy 4. It's a pattern recognition strategy, and you learn the first 2 rules of the pattern, how to identify that. Remember, it's designed for traders looking to catch momentum. And you saw that where a lot of trades and a lot of setups looked like absolutely nothing was happening, right? It looks like we were going sideways in a whipsaw market, in a range market, or it even looked like we were going higher in an uptrend when actually the momentum was going lower or going against what it looked like. Now you can apply it to all markets and time frames. I know I used a lot of stocks here in Forex Example, but I like to personally use it on the E-mini futures. We have traders that use it on crypto. We also have traders that use it just on ETFs or even weekly or monthly bars. It makes no difference what market or what time frame. The same rules apply. Remember, the advantages are it's extremely consistent, meaning that if you do have a loss from time to time, many times that loss is recouped or you capture it back in the very next setup. It makes you a part of the process, and I'll explain that a little more in detail at the end of this presentation. And lastly, designed to be as simple as possible. Remember, you have the first half of this strategy already. You know the rules. That's how simple it is. The remaining 2 are just reserved for the members that have chosen to already purchase strategy number 4. So as we close now, I want you to ask yourself, and ask yourself honestly, do you think strategy 4 can help your trading for the remainder of 2025? If you can believe it, we're already a third way through the year. We're already a third way through. If you're not seeing the type of results you had promised yourself in January, I think strategy 4 can help turn your trading around for the remainder of 2025. So here's how to take advantage of this. We have a great attendee discount for all of you taking time out of your Wednesday today. We're going to offer you our most consistent strategy. Strategy number 4, you will get instant course access, detailed instruction. Now, I know I didn't go into it today, but you'll learn in the course all of the entries, all of the exits, and all of the stop placements, okay? You'll get the complete course rules that, once again, can be applied to any market and any time frame. But let me reiterate, everything you saw today was really easy to apply and simple to use. With one click, you can see those auto-generated signals of strategy number 4 on our platform. This is the educational platform I designed to auto-generate these strategy number 4 exit and buy signals for you. So here's the beauty of it. Not only will you know where to enter, but you'll also know where to exit with this as well on our platform. For example, let's take a look at CDNS, all right? This was a sell signal coming into this month. Now, let's say you wanted to buy the puts, or just say you wanted to go short, but you didn't know where you should get out to cover with a profit. This is the beauty of what we have on the platform for you. Once again, you would click on the green strategy tab here, strategy 4. In the drop-down menu where you originally clicked on signal arrow, now you're going to click on range extension exits, and you will automatically see these levels right here. These are our extension exits. If you're the type of trader that wants to get in and out quickly, you would exit at level 1 or level 2. If you're more of a swing trader, you would exit at level 3. And if you're someone who wants to get as much bang for your buck and stretch it out as possible, you would exit and place your limit to exit at exit level number 4. That's how simple it is. And this is just one of the many different exit strategies we teach you, but this is one of our most popular because it's one click away on our platform. Okay, let's say you decided to exit at this 4th and final level. All right, so you placed a limit right here. Well, look what happened. In less than a couple of weeks, you would have exited with a nice 30-point gain, okay, putting that limit in there. And look what happened after that. The stock went straight up, and had you stayed in, you would have given back all your profit. This is what happens so many times with traders. They hold on too long, and then they see the trade turn into a break-even trade, or they see it turn into a loss. That's the beauty of these range extension exits. You're automatically exited out oftentimes before the trend changes. Here's another example. For example, here's a weekly chart of ACM. All right, at the beginning of the year, a buy signal was generated. Let's say you didn't know where to get out. Here's how these exit levels can help. Once again, click on strategy 4. In the drop-down menu, click on signal arrow, but that's how you find out where the signal is. Now we click on range extension exits, and they automatically appear. If you'd like to get in and out quickly, you'd exit at the 1st level or 2nd level. For a more moderate trade, at the 3rd level, and for the deepest of all, exit at the 4th level, because we have seen over time that the 4th level is usually where the trend changes, and that's where you want to exit. So let's say you decided to get out at the 4th level. You purchased it on the close, or maybe when it traded just above, and you placed a limit to exit here. Now you just sit and wait, and in roughly about 1, 2, 3, 4, 5 weeks, you exited with a 37-point gain. So you're out of the trade and therefore bypassed the entire sell-off. This is what happens to most traders. They feel really good about a trade, and then the next thing they know, they've given it all back, and now it's turned into a loss. Here's how the exit levels can help you tremendously, and you'll only find them on the PTS Primo Charting platform. So here's what we're offering you today. All right, strategy number 4, the complete course and rules manual, is at $695 value, okay? Now, the platform, which we'd like to throw in because it make your trading a lot easier with the auto-identified signals and exits, this is real time now for nearly $900. The 6 months value, that's $882. Here's what we're going to do. Now, normally, if you purchase these separately, it would cost you close to $1,600. We're going to discount that today, and we're only going to charge you for strategy number 4, $695. That's it. You're going to save nearly $900 or nearly 60% discount. Think of it. $695 gets you a strategy that I continue to use today that I've been applying to my trading for nearly 5 decades, along with 6 months real time of the platform. We have the automatic entries, automatic exits, stop placements. It's all right there for you. Okay. This is a great, great offer, a great value to turn your trading around. So invest in yourself. We know that you invest a lot in the most expensive platforms and the most expensive toys, such as systems and things you have no idea what they're based on. Invest in yourself. Learn how to identify these signals on your own. Take your trading to the next level with strategy number 4. Here's how to take advantage of this. You can either contact Pro Trader Strategies by emailing them at trading@protraderstrategies.com. Probably the simplest and the easiest way to get involved with Pro Trader Strategies and strategy number 4 is to give them a call at area code 310-598-6677. They have trading consultants manning the phones. They'd be more than happy to take your order over the phone right now or to answer any question that you may have. Now, that link at the very bottom is not a live link, but that link will take you to the info page with a lot more information about Strategy 4 and the platform. You can copy and paste that onto a browser, but if you go to the little chat icon right there in the Zoom category section, click on the chat box and you'll see there's a live link posted there. So you just click that on and we'll automatically open a browser for you and take you to that info page, okay? So as we always do at the end of the presentation, we reserve a little time for any questions. If you have any questions right now, just go to your chat box or the question and answer box, type them in. I'll answer them to the best of my ability. Someone's asking, how about stop placement? Oh yeah, well, first of all, with entries, with exits, and with stop placements, we have upwards of 6 or 7 different versions for each one of those categories. And the reason why we have those is so that you can become a part of the process. We realize that no two traders should ever trade alike. Someone may want to enter right at the market and say, I want to get in, I don't care because I think this thing's going to take off. Or someone may want to finesse it and say, you know what, I'm going to place my order a little bit lower at a limit maybe. I just don't know where to do that. Well, we teach you all of these different things in the course so that you can trade the way that makes you feel the most comfortable. It's the same way with stop placement. Someone may have a $250,000 account and say, hey, listen, I'll take a big risk because I don't mind. I have a big account and I can have a big wide stop. It's okay. So we teach you how to place that. Whereas someone else would say, no, I have a very small limited account size, maybe only $5,000, $10,000. I can't take that big of a risk. So we share with you different risk parameters for different stop placements. We do the same thing with exits. We share with you ways to get in and out quickly, ways to be more of a swing trader, or ways to stay in the trade as long as possible, how to track the trade. This is all included in the course, and this is what makes you a part of the process. The good news is that we work with you, and so that you can decide and define what makes you feel the most comfortable. Okay, I hope that answers that question. I see you're the same person is asking, well, what do you mean by work with you? Well, everyone gets my private email address. So if you have a question or if you want me to just, look over your work and see if you're properly identifying or trading strategy number 4 correctly, or just to, answer a question, we have this private email address that comes only to me. It doesn't go to an intern or to a salesperson or to an assistant. It goes directly to me, and you can ask me a question whenever you like. You can ask me a question prior to the market opening, during market hours, or even after the market, okay? So I'll be there with you every step of the way for any questions that you may have. This is how we work with you, and this is how we help you to become a part of the process, okay? I personally, someone's asking, what do I use strategy for? I like to trade it on E-mini futures because I am a intraday trader because that's the way I was taught when I was on the floor. But remember, just because I use it that way does not mean you have to. We have traders that use it on weekly charts of the British pound. We also have traders that use it on crypto. We have traders that apply for intraday stocks or monthly charts. It makes absolutely no difference. The rules are the exact same. So that's part of being the process, defining what time frame and what market makes you feel the most comfortable, and then we whittle it down and work with you to decide how to actually trade it that makes you feel the most comfortable, okay? Because remember, if you do not feel comfortable with a method, regardless of one of mine or someone else's, it doesn't matter what the statistics show, how great it performs, if it makes $1 million every year. If you don't feel comfortable with it, you won't be profitable. I can guarantee you. Because let's say it makes $1 million a year, but you only have one trade a month. Well, you may say to yourself, that's ridiculous. I'm too bored, or I need more action. So you're looking for something else and you may miss the trade. Or let's say it trades 30 times a day, but it makes $1 million a year, but you have to trade 30 times a day in order to make that. You won't be profitable. It won't help you. So that's why we say no two traders should ever trade alike. You have to trade a method and a way, a time frame, and a market that makes you feel the most comfortable. That's how you become a consistent trader, by becoming a part of the process and taking charge of your own trading, not by someone force feeding you signals and spitting them out on a nightly basis and telling you what to buy or sell. Okay, that's our philosophy behind all of our education at Specialist Trading and Pro Trader Strategies. Okay, no further questions? Well, if not, that brings us to the end of the presentation. I want to thank you for taking time out of your Wednesday. Strategy 4 is a great, great method. As I said, it's my go-to method. If you're struggling, if you're having difficulty with your trading, call Pro Trader Strategies at 310-598-6677. They're not there to pressure you. You don't have to feel obligated to purchase anything. They will answer any question that you may have. They can even establish a payment plan for you if you want to do that, okay? Even with that great discount, you can still establish a payment plan, but they're there to work with you and they're very flexible, okay? As we close, I just want to say thank you so much for attending. I really wish you learned something. I hope you learned something. I really hope that you understand our real dedication to trying to educate you and have you become a consistent trader. But most especially, I really look forward to teaching you and having you become a student of mine in the Strategy 4 course. Thank you so much for taking the time out of your day. I hope to see you in class. Bye-bye.